Meet Cresso, your next generation smart wallet for the Web3 landscape. It's seedless, gasless, and fearless, powered by the latest technology, making your crypto journey easier and safer. Go and check them out, Cresso.io.
Join us as we disrupt the global real estate industry, revolutionizing the future of property investment and ownership.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
Good afternoon, everyone. BC Richfield here, coming to you live from London. Big shout out to everybody that's joining us live today, and also to everybody that is watching this on recording as well. How are we all doing? Blustery and blowy day here in London, as it is across most of England. So get ourselves inside, get the kettle on, and take a look at some charts. Whack, hello, mate. See you in there. There we go, Erica. First one in this morning. There we go. Medal. She's in. First one of the day. Hans, hello, mate. Great to see you on here as well. Who else have we got on here? Let's just have a look through the comments. Loads and loads of people tuning in. Brilliant, brilliant, brilliant to see you all. Nip, my friend, how are we doing? Never late, Whack, always on time. Geo, there he is. And yeah, definitely didn't forget you in that tag, Geo. Just accidentally tagged some random person instead. Tim, welcome. Great to see you. Craigie boy, nice to have you here as well. And obviously a big shout out. McGraw, great to see you guys. And a big shout out to everybody as well. And little Zach, there he is. A big and special mention for our young mascot, Zach, who's tuning in again today. So guys, look, what I wanted to do today was take a look, obviously, and just kind of share a little bit of my analysis as I do with everybody over at the Nest on a Sunday evening from our Bitcoin report. By the way, guys, if you're not a member at the Nest, you can check down in the description. You can find ways that you can join from free, get our trading calls, get access to all the education materials as well. But do remember, you can also join up, take a free trial, and you can sign up for things like the newsletter. You can get the reports and bits and pieces. They can come in really, really helpful. So I want to kind of start by focusing on the daily here, right? So one of the key things for me is, well, actually, let's pop the weekly back on as well, right? Because it will give us the context that we need kind of looking at Bitcoin. We can see why it's kind of trapped in this little kind of range at the moment. So just zooming out for this, just to give you guys a little bit of context, this is a key area for me of interest, right? So we've got this high over here, which is within a fair value gap here, right? Making it an intermediate term high if you're somebody that studies ICT, for example. These basically provide really, really good liquidity pools. So we always want to be really conscious. They're a draw on liquidity as they go up there. But it's also one of those areas that we need to be careful when we get there, right? Now, obviously, markets don't just do up only and down only, as we can see by the chart that we've got in front of us. However, one thing that's really interesting to me here is how we've kind of displaced over this high, right? So when we got to this high, yeah, so obviously the reason that we're targeting highs, lows, bits and pieces like that is because of the liquidity that rests above and below them. So the type of principle that I work from is that liquidity is the price, is always heading for liquidity above an old high, below an old low, or looking to rebalance a fair value gap, okay? Then the idea is that basically when we're between these key levels, we retain that bullish bias on a higher time frame for this example. That's what we then decant down onto our low time frame, and then we're trying to find and finesse the very best entry points that we can. But something that I really don't think often gets covered enough is watching how price moves when it gets to these levels, right? Now, what we can see here with this example, with this red line, is see how price takes this initial rejection here. And look at the difference when we get this, what I would call a strong close above, right? So we've got a large body candle that closes above, at which point we can then start looking higher for where our next high time frame targets are, and we look to get ourselves entries kind of in between. Now, obviously, we displaced aggressively over this high here, but as we look back here, we can see that this is what's currently capping the market. So we had a rejection there, second weekly rejection, and now price is starting to kind of move back and sort of go into a corrected move. Hi, Mar. Hello, mate. Brilliant to see you live. Very much welcome. The other area that we're contesting with is this gap. So we've got a weekly fair value gap here. I think the really, really kind of good news for the bulls is get above this and have this kind of strong close. We're working our way up towards this gap here, which is just shy of 60,000. And then obviously, you know, we're as ridiculous as it sounds when we look at this at the beginning of the year. You're kind of looking to hunt down all-time highs. Now, that's not why I'm here. I'm not here to tell you and say to you, we're going to all-time highs and build up all that hype. We're literally just taking this day to day, level to level, chart to chart. All right. So we just want to find out where we are. For me, this provides a good kind of calling off point for price at the moment. So what does that mean? It means our high time frame bias remains bullish, but we need to show caution here, right? You know, basically price is trapped between these two levels. Yeah. So we've got this here, right? We got that fair value gap, and then we've obviously got this big beast up here as well. So what we can see is price is basically at the moment just ranging between the two of them. So what we want to do is we want to kind of get ourselves to a point where we can make a play. So last week, for example, we're favoring long setups when we're down here, when we're delivering from this bullish fair value gap, showing caution and looking to scalp these on an intraday basis as we push higher into this weekly fair value gap, right? Now, the key thing here is context and time frame, right? And that's going to be very much dependent upon how you trade. For me, I'm somebody that trades the lower time frames. So I like to use the 4 hour as my kind of main bias, right? So let's just get rid of our weekly levels here for a second because we don't want too much stuff on the chart. Now, while we're down in here, the one thing that I said last night in the Bitcoin report was this for me is quite key, right? So this is our H4 FVG. So what we're going to do is we're going to label this up FVG H4. Now, the interesting things that gaps tell us is that if we're bullish here, and we would be bullish, why would we be bullish? Well, first of all, we're delivering from a bullish fair value gap, right? So let's just pop that in green so that we can really kind of see the visual context. Now, while we're delivering from this, it's a little bit treacherous to short, right? But at the same time, we can't just be aping into longs. You would have gone long up here. And obviously, as we can see, you would have got wiped out this morning. Now, the key thing is we want to see the state of delivery where we're delivering from, align that with our high time frame bias, and then we're looking for inducement, right? So this sweep of this high, we can see again, look, there's no displacement above it, right? There's no energy, there's no high body candle breaking through this. If there was, we would look then to these highs for where price is moving to search for liquidity. Sometimes we make things overly complicated for ourselves and we forget that really when you're looking at the markets, it's all about buying and selling, right? It's all about value. So if people consider Bitcoin value here, but they're selling it off up here, then we can see the kind of area that we're dealing with. So for me, what I want to see is what these gaps do, because if we're bullish here, right, then we've swept some lows here. We can see these nice long downside wicks. So we can see price getting bought up. We can see the absorption, right? So we would have expected price to come up, right? I was initially kind of targeting this. We didn't. We stopped. We started to range. Can be quite common as we move price action across the weekend. But then to come back down to here to find support and move higher, right? And that's why this gap was really, really of interest. And what I said, and a principle on this is if we start closing below these gaps, then the chances are that price is looking to move lower, right? Because it hasn't found value there. It hasn't found the necessary buyers. People aren't willing to buy at that price. So what we're looking for now is willing buyers lower down, all right? Tim, take a look at FET. Yeah, sure, mate. Yeah, just remind me towards the end. We can certainly pop onto another chart. We can take a look at a few alts and bits and pieces today as well, guys. So please do let me know. Now we've closed below that, right? So now we opened this candle, right? And we've only just opened this candle. So there's a couple of things that are of interest for me or for anybody out there that's looking to kind of intraday trade this. I'm just dropping us down here. So we can see we got the close below, right? We can see how price has kind of played out here. Once again, we're kind of delivering from this gap. It's not very clean, which is something that I don't particularly like to kind of see these areas respected. However, if you catch yourself in illiquid market conditions, then price action can get a little bit choppy. So for me, price is delivering bearishly. We can see our high time frame level that we've closed below. So on here, I've kind of got two pre-made targets really. So one is that price comes down and chases down this low, and then ultimately we've got this low as well. Now, does that mean that overall I'm flipping bias? Absolutely not. Right? It's really, really important that we kind of give ourselves the context. And if you're ever feeling lost on the charts, or you feel like you're getting chopped up a lot, often you just need to zoom out a little bit. Okay, by zooming out, we can see just how immensely bullish this trend is, right? Yeah, actually, guys, let me just make a couple of notes of these. FET and MAVIA. Cool, we'll take a look at those in a moment, guys. So in terms of Bitcoin, at the moment, we're ranging, right? You can see we have it. It's perfectly natural for price to do this. Happens, price goes up. In this case, we take a key high, or we have an expansion. We then have this consolidation, right? Price pulls back, and then we continue higher, right? And we continue this until we don't, right? So it's really, really important to have the context of the bias. At the moment, we can be intraday bearish, right? And looking for short setups, but ultimately we are looking for continuation here. And at what point would we stop looking for continuation? Well, if we look at this price leg or this dealing range here, right? And this is just split. This is just a Fibonacci, and this is our 50% line. Now, what we look for are kind of value areas. So if anybody's familiar with the teachings of, say, ICT, who would split this into sort of premium and discount, then it's a really good, clean way to look at this. So in the principles that if this is our dealing range, that shorts are typically favored from up here, right? Because we're in a premium, you want to be shorting in a premium, and you want to be buying at a discount. So if price is to kind of follow this pattern, and actually you can see quite often that it does until it breaks, right? So for anybody that's familiar using Fibonacci's, for example, if we were to look at this, so what happened? We took some liquidity below these lows here, and then we took liquidity from the highs, meaning this gives us our dealing range. So we're focused on short selling down here, and then we're focusing on long down here. It doesn't mean that you just jump in and you just go in blind. It means that it's giving you an indication of what the trend is doing. Now, obviously, if we extend that down to here, right, because we can see that we've taken a high here, we've now taken this low, meaning this becomes our dealing range. We can see ultimately that then when we shift structure here, which we can see by the inversion of our fair value gap down here, again, very simple principle, guys. Obviously, if we're delivering bearishly here, oh, and if I get the right tool up to show you that, yeah, if we're delivering bearishly here, then what are we doing? We've swept liquidity from the high, we've set a low. Price comes back into this gap, yeah, and then price continues lower. So the expectation is that price is going to reject there and go lower. However, it doesn't. It breaks above, and then we change structure. Okay, so it's very important to remember that before we're looking to be bearish overall, we need to be respecting market structure, and beyond that, we also need to think logically, right? This is obviously incredibly bullish at the moment. So what would I be looking for in terms of support? Well, like we said, we've got our 4-hour FVG, so our daily FVG here, which is bullish. Now, if we get a close below this, yeah, and that has to be on a daily scale, then for me, I'm looking for a deeper correction. And looking at our principles here and looking at the expansion of this leg, this really seems like a fairly obvious place for me for price to correct to. Now that's down around about 46.8, that starts, and kind of the gap closes up about 45.5. Doesn't mean that we have to go down there. But what it means is we can set ourselves a particular set of rules, meaning that if we're closing below this and we're showing weakness, price very rarely just stops in the middle of nowhere, right? So we've got ourselves a pre-made target on the daily. We can then go down into the lower time frames and find ourselves some entries. So just overall kind of closing thoughts on Bitcoin really with where we are at the moment is we're obviously bullish, high time frame. On the lower time frame at the moment, we're looking for that. As we discussed, we've closed below that FVG. So at the moment, we have some pre-made liquidity targets lower down. What would I want to see in terms of this flipping back to going bullish? Well, I think on this scale, or maybe even on an hourly, we're just looking for our gaps, right? So if price is going to correct higher, and we don't know what it's going to do when it gets there, that's currently a bearish fair value gap, right? Then price, if price is going to correct higher, then that gives us a really nice ready-made target, as does this high above. However, again, closing above this is what I'd be looking for in terms of signs to say that the market's now ready to push higher. Ultimately, if we have our bearish gaps, they should be rejecting price, giving us opportunities to climb on board with some short setups, in which case we're obviously targeting, you know, our clear and obvious lows, which would be this one down here. And that's all we do as we run through the time frames. Now we look at the 15-minute and we say, okay, well, if we break that context down further, and again, as I've said, I don't really like this gap, so we kind of closed above it here. However, when you hear me talk about displacement or energy, then this one, okay, there's a pretty decent candle, but there's not lots of body there. And when you look both sides, you can see the wicks showing a little bit of indecision. This one here, there's nothing bullish about that or these. This one, however, delivering from this fair value gap, looked like it had some promise to reverse, but ultimately price has broken down. So for me on this time frame, I'm not really looking to trust that. If we're looking to move even lower and saying, okay, well, price could be getting to draw up here, well, then let's look at the gap that's rejected price here, right? This one. We set this gap, right? Price delivers from this bullish FVG here. Yeah, it's come down, had a reaction, ultimately got caught in this consolidation here and has driven it lower. Now, with using this gap, the reason that this is key at the moment is because we can see here rejection, rejection. So if we close above this, then we can make the assumption that price is going to start looking for these highs. When we see these highs, right, these untapped liquidity pools, you can see price kind of guiding or kind of showing you a map as to where it's going to look to potentially go. So obviously remember that the lower the time frame you're using, then obviously, you know, the more noise that you're going to get. So make sure you're aligning that with a higher time frame bias. So ultimately, if we're saying at the moment, because we close below that 4-hour FVG, then we've got an intraday short-term bearish bias, then what we're doing is we're just looking for these areas to give us the opportunity to short down to lower targets, right? When we stop doing that is when we close above these, and then we have an acceptance that price could be looking higher. So let's zoom ourselves back out and let's find some nice clean charts so we can just take a look over, right? And we're going to start with FET, which Tim has asked for here. So let's take a look at FET on Bybit. Okay, let's ultimately zoom out and get our weekly view. We can see here, obviously, we just had this absolute massive run out. Let's see if we've got a bit more. No, not too much more info on the Binance chart either. RUNE or PYR, take a look. No problem, T. We'll see if we can squeeze them in as well. So looking at this at the moment, what have we got? Not really much context there other than the fact that obviously we're just super bullish on this time frame, right? Price again, breaks structure here, comes up, small consolidation, retests that, draws price back down, inducing people who, because we've taken this high, start to take short positions. They get caught offside. That liquidity there, all that selling is then bought up typically by institutional buyers. And then you get these large expansions. So if we're going to look at the daily, again, we've got a really, really kind of nice balance in price action here. You're not seeing many gaps, right? You've got a gap here and then you've got a gap down here. The rest of this is very balanced on the daily. Again, you can see how price was kind of under this, right? See price is consolidating. Ultimately, we pop, hold and respect this level and then move higher. A good trick actually, or not a trick, but something that you can look for in these situations is, you know, a change in state of delivery. So what we'd be looking for here is when we have our down close candles, or in this case, a consecutive group of down close candles, same with these here. What you're doing is you're looking at the tops of these and you're waiting for price to give you an indication that it's no longer respecting them. So this is a good example here. Down close candles. If we're bearish, yeah, then we want to see the up close candles defending price lower. Yeah, so here's our order block, price pushes lower. Here's our order block here, price pushes lower. Now we reverse here and we form this order block. And what I really like about this is we're delivering from this consolidation over here. We've swept liquidity, and look at that. You hear me talk about displacement. Look, the bodies just aren't willing to go below there. You see the wicks dipping in. it's getting bought up aggressively. And then, you know, something that I always look for, and I know a lot of the TBM members who are on the stream today will almost get tired of me talking about them, but inversion fair value gaps, right? Should be defending as bearish here. We get price pop above. That's our first indication that price is looking higher. Our change in state of delivery here, which we'll do in blue, is our next indication. But ultimately, look, even with this kind of move that we have here, we have this here, which is our intermediate term high. Yeah, that's just a high that's within a fair value gap, right? Or a low that's within a fair value gap will be an intermediate term low. So even when we closed above that here, before we got our change in state of delivery, we can see that price is hunting down liquidity, which it finds above there. When we get the strong close above that, people also might notice that we inversed another fair value gap here, meaning that then price is ultimately looking for liquidity higher. Now, seeing these key levels, again, an intermediate term higher, right? Because we're running through this fair value gap over here. Price comes up, has initial rejection. That's natural because people will be taking profit, closing out some position. Then we get this expansion higher, right? And then we're just looking and we're just following those same principles, right? If price is moving higher, we can see we also at this point inverse this fair value gap over here. Then we can see here on this pullback gives us chance to position and price to push up. So when you're looking at your key levels here, and especially any abnormal or any particular long wicks, it's really important to see how price is reacting there. Again, lots of buying in that candle right as we close above. So just keep that in mind. If you are feeling a little bit lost on the charts or you're really, really struggling to kind of find your bias, then typically it often means you just need to kind of zoom out a little bit and look how price is reacting at these levels. Now, I know a lot of people kind of have different things to say or thoughts on support and resistance levels, and they all seem like they're these kind of magical or silly little lines on a chart. But the fact of the matter is, what you're doing is you're seeing human psychology here play out on the chart. You can see where the selling pressure was previously. So if price is no longer being sold in this area, price is starting to break out aggressively above, then it means that price is searching for liquidity higher. So that's what forms our bias. So looking at this now, what we have are two really, really key things that we can monitor here on the daily. So we can see this at the top. And we also have this down here. So for me, I'm looking at this and I'm saying to myself, okay, well, if price closes above this, then I'm immediately going to be targeting this higher and then higher. Price closes below this, then we've got a pre-made low here. Price could look to sweep the liquidity there before moving higher, or it might be looking to correct lower to rebalance one of these gaps. All right, which remembering as we get down there, we'd be expecting a bullish reaction. However, if we close below it, we then target lower. But if we have that reaction, we look on the lower timeframes for this to be turned to support. And then that gives us an opportunity to get in. Quite often, the places that you want to be buying and selling on the charts are the places that you don't really see as obvious. You know, how many times do you see people, Yargo, hello, mate. How many times do you see people start to get really, really bearish, the market flips, and then it moves, right? It's just price has to be of value to all buyers, but especially to institutional buyers. And we just want to jump on board with that order flow, all right? So they're the kind of lines that I'm interested in here. Now I'm going to drop down to a 4-hour chart and see what that's telling us. Now, actually, what I'm going to do is I'm just going to remove these for a minute or hide them because I don't want them to get distracting for people. But basically remembering with those, you would require a daily close. So we won't know until tomorrow or potentially even later than that what price is considering there. So if we want to take intraday trades, then this is where we want to be looking. So first thing I'm asking myself is, where is price delivering from? And I tell you one thing that looks really, really interesting here is how this liquidity is starting to build above us, right? And I really, really like that. We've got two really key targets. We've got the liquidity there and then liquidity here. I'm just going to do them in green to just show that they're our buy side. So then I'm saying to myself, okay, well, what's price doing? Where's it delivering from? And we can see that it's delivering from this. Now, the next question I've got is, have we swept this? And we have. So we've taken this low, giving price the opportunity now to change and get on board with more of a bullish bias. So we're just going to look for further context below. We can see we had this expansion here, right? So this has just kind of started to pop off now at the moment. We haven't got any inversions at the minute. Yeah, a really good point here from Harms as well. So you can often see these kind of consolidations, a little bit of uncertainty. We've got a big news week heading into the market. So guys, do make sure you're using something like Forex Factory or Baby Pips or something like that. And then, you know, you're looking for what's known as red folder news. So your FOMC, whether we've got CPI, PPI, key and core events typically that are happening in America that tend to move the market. So that's a really good reminder there from our friend Harms. So if we're here at the moment and we haven't really got the clean kind of context that we want to look and find entries, well, if this candle, or when this candle closes, sorry, the 33 minutes, should we leave this gap that we currently have, then ultimately it would be really, really good on the lower time frames to watch price kind of draw back down into this, and then we can look at it, make an attack on these highs. In the same vein, if we close below this, then we can be fairly certain that price is looking to move down a little bit lower, because as we have this here, it's going to be fun. As we have this down here, we can see the price dips in. We show weakness here. Well, we've already swept this low, right? So if that was the inducement, if price has got the liquidity it needs here to really change and focus on higher prices, then we shouldn't be closing below this fair value gap. So we would look at this as an area of support. Moving down onto the 15-minute chart, which gives us even more context, we can see that we've got this 15-minute FVG. And I'll just label that up as our M15. And price is now kind of delivering from this. So depending again on what type of time frame trader you are, this can teach us and tell us a lot. Now, we always want to refer to our higher time frame, right? So you'll notice that I just deleted the hourly FVG. It's not because I'm not respecting that, because I absolutely am. It's just if I'm taking this context and then I'm looking to move this down onto a lower time frame to find executions, for example, if I want to move to say a 2 or a 3-minute chart, then all I'm simply doing here is looking for the same principles. So price is delivering from this 15-minute FVG, right? We know we've got an hourly one developing there, but it hasn't closed yet. So if we're going to look to jump on board with a bullish bias, right, then we need to find a place that price can kind of give us an indication. And again, if we refer to our good old friends, the gaps, right, we can see here that this bearish gap, just do that in red, is what's currently suppressing price, right? Price sets this gap, draws into it here, and sells off, right? We did exactly the same above here, right? So price shifts down here, we get displacement, price then draws back up into this. And this is a brilliant question from Mikey here. Really, really good question. So typically how I've always found to do this and to make it the cleanest way that you can, because the point that Mikey's making here is that obviously, fine, we could be delivering from this FVG here, yeah? But let's say, for example, as price looks like it's kind of moving down now, let's say we kind of close below this, yeah? Then do we say, oh, okay, and let me just draw that in for you so that you guys can see that a bit clearer. Yeah, so closing below this bullish gap would make this bearish, right? So then all of a sudden, you're saying, okay, well, price is then looking for liquidity lower, right? And what was BC just banging on about? He's banging on about price being looking for liquidity below old lows in this case, so this is where we want to target. But what happens if we then just react from this gap and then price goes back up? So it's a really good question, Mike. And what you need to do, certainly what I do, is then I move time frames to make sure that I'm just finding the one clear and clean gap here, right? Because like with this one, and you can then move to a 4-minute, you can see that when you then get that one singular gap, then basically with this one, we can see that, okay, price closes below this, then ultimately price is going to be looking for this, and that's when our kind of high time frame context starts to build. But that's a really good question. And it works the same if we look at it just very quickly on the higher time frame as well, right? So you'll notice that the large, clean, singular gaps, yeah, this one here, large, clean, bullish gap, price comes in, see how the bodies respect this, and then ultimately when we see them being respected, our theory is then that price is moving for liquidity higher, right? Also thinking about moving so between external to internal liquidity, and what we mean by that, if we look at how price moves, you can see when we take a low here, right, price ultimately takes this higher, so we induce here, price then takes this higher. That's taken external liquidity in the form of a higher. It then finds internal liquidity, which is our fair value gap. Price then fills the fair value gap and then pushes up higher to take this liquidity. We notice we take it here, price moves up a little bit more, and then we're looking lower and we're saying to ourselves, okay, well, where's price then looking for support? And we can see that we've got this gap down here. Now, obviously, price, unfortunately, or fortunately, actually, doesn't move in that much of a predictable way. So what we have to do is set ourselves parameters in place and say, okay, for example, when we're looking to hold this fair value gap here, yeah, and we close below, which we can just see with these bodies here, this becomes a bearish FVG. However, we want to show a little bit of caution, right? Because as we look left, we can see this gap here, yeah, and the bodies haven't closed this off yet, right? So while I think that this isn't going to show as much of a reaction here, it still has significance. And this has supported price, right? So price comes up into it here, huge support here before a big impulsive move higher. So in a lot of ways, we'd be a lot more prudent in terms of looking at our short bias, waiting for this to be closed beneath, and then again, highlighting our key liquidity targets that are lower down. So even on the higher time frames here, you see we have this section, for example, just going back to what Mikey was asking, and we've got 1, 2, 3 gaps here. Well, you would then move up the time frames if you wanted to look for that to find your singular gap. And that kind of gives you a little bit of a better indication on where price can be heading. So quick question here from our friend Erica. If the M15 is your middle time frame, how far are you moving up to get a clear FVG? Yeah, really good question, Erica. So, I mean, for me, there's one of two things that I'm looking to do. As my middle time frame, in the time frame that I'm looking to frame a trade on, yeah. So as we're doing here, for example, then obviously we have our kind of singular clear FVG here at the moment. But if we didn't, I'm just trying to find you an example on here. Typical, just a chart full of just beautiful singular 15-minute fair value gaps. Then I will go up to a 30. I don't really use the 45-minute, so I would typically range between 15-minute and hourly in order to frame it. However, obviously, we need to be really aware of the context that we've got. So if our triple screen system is built, for example, if we're using 15-minute, then we have our 4-hour, right? So on a 4-hour, what we're saying here is we're establishing our bias. Price is last delivered from this bullish FVG, right? We've also closed above this bearish FVG here, which for me means that I'm still, okay. So yeah, but I'm still kind of at this stage holding a bullish bias, right? So we've come down, we've had a strong reaction, we've taken out this high, we've inversed this FVG. For me, I'm looking for opportunities to get involved. But sorry, to go back to your question there, and you're very welcome, Tim. So you mean starting on the 1 minute to get an entry? Yeah, so again, on the 1, I'll typically go to the 5. Yeah, so what I mean by that is if we're looking at this as the reaction point down here, we can see here that we've dug in to our high time frame bullish fair value gap, right? So the key thing here is then how we react, and we can see how we hold this level really nicely. However, the thing that makes this pretty treacherous here is that we've just got this huge kind of section of gaps, 1, 2, 3, 4, 5. So immediately as I look at that, I can say, okay, well, if I now move to a 5-minute, then I can see here that this is our key gap. So what I need from price here is to see displacement and energy through it. We sweep a low, we react off a high time frame level. So now we're just waiting for that signature in price to tell us, is price willing to step in yet? Now, for the keen-eyed amongst you, and I think many would have seen this just because of its being zoomed out, we have this bearish gap here as well, right? So actually, maybe we want to go to, say, a 10-minute chart, and then what you can see on the 10-minute chart is that this gap here gives us a really, really nice entry, right? We've come down, swept this low. We had an initial rejection here at this gap. I'll get rid of that because it's a lower time frame. Now look at this reaction. And this does a couple of things that we go over in the trade club at the Nest. So you guys will probably be bored of hearing me say this, but you know, if you're setting an order block, when you get that displacement and price is moving higher, especially if you're kind of leaving that initial high untapped, then often price is looking to reach for liquidity on a higher time frame level. So if we then go back to our hourly here, and we look at this reaction, what we notice is that the key kind of highs that we have is that internal one here. And then as we move up, we have these really lovely equal highs here. Now, equal highs make really, really good targets, as do equal lows. They don't have to be exact. But, you know, as we can see here, price gets up to these kind of pre-made liquidity pools, and then we see this initial rejection, right? So now looking at this in real time, what we're saying to ourselves is, okay, well, if price is getting ready to move up higher from here, here's our support. This is where we're expecting to see a bullish reaction if we do see one. If not, we're either scalping intraday lower, yeah, in which case at the moment we can see there's nothing really clean on the 5. We've got a very small gap up here, right? So we could look at that. But ultimately, I think for me, this is a really key gap, because that's what's capping the market at the moment, right? So that's our bearish gap that we're really interested in. So what we're saying is, if we start to see price really reacting, we can see we're getting this nice bullish reaction here at the moment, and we push higher. What we want to then see is a 3-minute close above this. We'll do that in green to show that that's bullish. And then my immediate target becomes here. Again, relative equal highs. So close above here, we can look to scalp up to there. And I know a lot of you will think, oh, okay, well, actually, there's not really a lot of, really not a lot there for price in terms of reach. But it depends how we go, how we move, whether we set an order block, where we can put our stops. But ultimately, if we had something like this, you're still getting a 1.3% move to the upside. Mikey, yeah, really good question. So the kind of idea of these principles in this setup, a lot of which I've learned over the years from people like ICT, Trader SC, as well as a few other really notable ones, like Trader Dante and stuff like that, is that really, you know, and not just them, but everyone really, the concept is that price is fractal. So we're looking for methodology that we can apply on any time frame. So let's take a look. So just very quickly, this is my current thinking on FET. Sorry for anybody that was interested in this one, is that while we kind of hold this 15-minute FEG, I'm looking for price to push higher. We have a lot of resting liquidity above these highs. We've just had an initial reaction at these equal highs, which is fine. If we start closing back below, yeah, just to give the context, back below this 15-minute FEG, then I do think the price could ultimately squeeze lower, because we've taken liquidity from down here already. And what you have to say to yourself is, if price is really bullish and the buyers have really stepped in, why would it be revisiting this level again? It would only do so in terms of showing weakness. So that's where we want to be cautious. And we know that we've got some pre-made targets down here. So on an intraday basis, that's where I would be looking at that for FET. Somebody asked for MAVIA, didn't they, I think? So this will give us a good example. So I'll show you here, Mikey, and for anybody else that's interested on the higher time frame, let's just see. Not sure it's going to be the best one to do this on, is it, unfortunately? Let's just run through a few thoughts on this very quickly. Just spin all this. But look, same kind of principle here. Look, price came down. We held this gap. So that's obviously been left on there from a while ago, the up arrow. But the principle's the same. We make and leave this pre-made liquidity. Ultimately, that was our high time frame target. Price comes down, respects this gap, also dips into this lower, which was a higher time frame fair value gap as well. And then, look, when we inverse this, we come above, we hold it into this gap as support, inverse this very small bearish FEG, which with a big bullish candle giving us the indication that price is ready to move higher. I don't really use the do you know what I used to? And I've got a really awesome one that I spent ages. I'm a really terrible coder, by the way. And the person that created it was really, really helpful and put it all in for me, use divergences and bits and pieces like that. I use B Pro now for like all of my divergences and stuff like that, right? It's really, really helpful. You get these divergences, you're showing when there's a discrepancy between price and momentum. Basically, that's why you would use a similar thing with an RSI. The difference with our indicator is that it kind of takes into account 10 different oscillators, meaning that the percentage it gives you here gives you an indication. Now, I find the percentage is really accurate. Often when you're trending, what you're going to do with your divergences, and this is a big thing about using the RSI, is that you're either going to catch the reversal of a trend, so we're in an uptrend here, this actually caught the top, or you're catching the corrective moves in an existing trend, right? So divergence here, price pulls up, gives us the opportunity to take our short positions chasing down these lows. Divergence here, price pulls up into this gap, giving us the opportunity to chase down these lows. This divergence this time, yeah, is a corrective move higher. Ultimately, we didn't get up to that. right? But we have got a gap down here that we filled. So now we've got this one here. We now need to look at this and say to ourselves, okay, well, what's price done most recently is it's taken out this high, right? So what the bulls will want to see here, just move this down to a lower time frame to see if we've got any gaps. The bulls will want to see this inversed, right? So this closed above. This is a really nice clean price leg as well. We've just got this singular FVG. So if we have an hourly close above this here, right, then I would be on the lower time frames looking for a slight pullback and then for price to ultimately come and take out this high over here. But in response to, sorry to go off topic a little bit there, but just looking at momentum and looking at the divergences, because that was a really big thing that I used to use the RSI for. The thing that always kind of put me off with the RSI is, and I've built some really good strategies with it over the years, but it can spend a lot of time in overbought or a lot of time in oversold, right? And when you're in those conditions, it makes you a little bit kind of overly cautious, or you're expectant of a reversal then. But actually, when you look at it, price can sit up there for a long time, and it can be super bullish when it's up in, overbought, and it can remain super bearish when it's down in oversold as well. So we always want to kind of play that in. But I do, let's have a look. See if the old thing will still load back up. It's been a long time since I've used this, but a really good thing to do if you do trade RSIs, and like I said, I did used to build a lot of strategies around this, is that really you're using your overbought and oversold areas to, to give you an indication of where you're, going to take your likely short positions from and your long positions. You see these lines that we coded in are for divergences, right? So you can see you get the divergence there, price has the correction. We can see we get our divergence here, price has the correction here as well. But basically what you're looking to do is when price gets above this dotted line here, and if we just zoom out a little bit more, we can see it. But when price gets above this dotted line, that's when we're up in overbought. Gordon, hello, mate, from Bedford. But look, it just leads to a small correction here, right? And then price gets back up in overbought again. So you start to short it, and then it kind of longs again. But the principle really is that while this is very high, yeah, you can see how long it stays here, right? And then you're constantly trying to short this damn thing, and it's just going crazy. So a good way to do it is to kind of keep your bias on a higher time frame, then move to a lower time frame and use this as a little indication of when you can have really good buying or selling signals. Never late, mate. Always precisely when you mean to arrive. So yeah, let me just get rid of that quickly so that doesn't take up too much space on the chart there. So for, I can't remember who it was, but somebody asked for MAVIA as well, didn't they? I think it was Imar or Emir. Really, really sorry if I butchered your name there, mate. So I think the hourly gives us a really, really lovely clean read. I think that this is looking like our low target. I'd be looking for a reaction here or probably down here as well, because we've kind of got a cluster of lows. So the other thing that we've got down here that's really nice is this order block. So price came in and set this. Right, this down close candle. Look at this big move that we had away. It's already a kind of area of support as well, so that gives it a little bit of extra significance. Then when we've come back up, we've touched into this and had a really strong reaction away. So we can see if we're looking for confluence, we've got this low here sat within this order block. So this is the area I'd really be targeting to look for longs, right? And then, like I said, if price is too bullish that it can't even get down there, then I want to see a close above this hourly FVG, and then my expectation is for price to move higher and ultimately continue kind of slightly more bullish assault. So let's just take a look, just so that we can cover looking at that on the higher time frame for Mikey. I didn't do it on that one, Mikey, just because we really didn't have a lot of data where we should hopefully. Here we go. Have a lot more here on RUNE. So let's clear this up here. Right, so weekly here, which is ultimately going to be our highest time frame, and that's quite hard with a lot of crypto charts really to move much above that. Bear with me one second, guys. So here we're looking at the same principles, right? So we're looking for where price is delivering from. We can see what they were delivering from this bullish. It does it like a cup and handle, you're right. So we can see here that we're delivering from this bullish FVG, right? So with that principle in mind, while we're delivering from that, unless we close below this, and again, we'd be really careful here because we have these fair value gaps lower as well, then we have that target above us because price is basically now drawing down into this. So how would we have played this? Well, we'd look at our kind of weekly time frame and we have this area highlighted. Yeah. Now it depends kind of when you really push up. I don't particularly trade these kind of high time frames, right? But from a weekly, you would probably move then to say a 12-hour. And then when price is reacting at these levels, like we can see here, we're just looking for the same kind of principles. Now, one of the simpler methods that I like to use that I've taught for many years is the breaker line method, right? So we're looking for a sweep, which we get here. I'll just do this slightly bigger. So remember, this is all based on the fact that we're reacting from this. We're not even thinking about shorting here. If we were looking to short, we should have been shorting from up here, right? And actually, price gave us a really, really good opportunity to do so again with one of our inversions. Yeah, that's what we were expecting to hold as support. The fact that price just really shot through this gives you an indication that it's a bit heavy, right? Then we're looking for price to seek liquidity lower until we ultimately get, you know, which didn't happen, obviously, but we would have wanted to see this inversed. Yeah, so price close above this, and then we would have been looking higher. But ultimately, everything's being respected. So as we look down here, we can see we get a sweep. We're within our key level. We're looking for a reason to go bullish. We want to find the high. Yeah, let's zoom in a bit for you guys. We want to find the high that sweeps the low. Yeah, so this is obviously for longs. It would be reverse with shorts. And then all I'm looking for here, I just call this a breaker line. It's just to show that we've taken or we've moved structure, right? What's happened here is price has come down, taken out liquidity. Then we want to see displacement, right? Meaning that I want to see price really pop. Yeah, so you can either take it as a very binary system. Yeah, in terms when you get the close there, you would set a limit order on this line, so you already know what this is, so you can have that set up on your exchange already. Price pops and closes above here would tag you back in here. Your stop loss simply goes below the swing low, right? And then your first target here would be this swing higher. Yeah. Now I'm quite a risk averse trader, so for me, I'd be looking to move my stops to entry there, take some profit. Price comes back down here, right, and takes us out. That's not a problem for me. I know a lot of people kind of, you know, really want to kind of hold these positions, which is absolutely fine. Now, I like to move my stops because if I have got this wrong, I'm on the wrong side of the market, then I book some profit and I get away without taking too much damage. But then we can see price is ultimately just coming back into this level again. So what would we look for here? Well, we can look for the same principle, right? We want to see a sweep. We can see we have an internal sweep here. We can see we have another sweep here. And I really like that one because, again, look, that was the low that was set. Price has literally just dipped down below this and then had a really quick reaction higher, right? Now, what we want to do here is we want to find the high that has swept the low, right? And this is a really tricky one, actually, because the high is actually here. You see we have this here. The highest set is here. That's the one that then takes it lower to liquidity. So our entry would be here, which actually ends up being a really, really nice entry. So we close above it here, super bullish reaction. That goes on the limit order. That sets our swing low here on the close of that candle, which is perfect. If not, we'd have to have this lower before that was set, in which case we would target this swing low here. And then our ready-made liquidity target here. Now, the great thing about this is I'm watching to see how price reacts here in the same way that I would have been here. Yeah. So the fact that price just had that really wick rejection, rejection, rejection. When this closes here, you're pretty certain the price is either looking to correct deeper or it's going to take your initial position out. Look at the difference with this, right? When price comes above this high, yeah, this thing just continues to rip. So then our interest turns to this high over here. And ultimately, I really like this one here, right? Because again, it's an intermediate term high, one that's rebalancing a fair value gap. But even still, look at the close above it, right? If we draw this out along, yeah, look how price closes, the big body on that candle as price booms above it. In which case we're then saying, okay, well, let's see if price reacts and how it respects the levels. Respects this gap here. We draw into it a tiny amount, and then we're looking left and we're saying, okay, where's price ultimately reaching for? And that would have been my target. When price then broke back down below this level, that's when I'd start to close out my position. But I would have, and I still am, quite surprised that we haven't taken this out. Now, when we leave targets like this and we get so close to them, very, very often price comes back to take them out, all right? So when we're looking at this, we can say to ourselves, okay, well, what's price doing? Currently delivering from this bullish FVG here, yeah? Do we have any kind of parameters that we had before to get long again? We do. We've taken out this low, and that's a really nice low again because it's an intermediate term low. Then we're saying, okay, well, where's the high that took the low? And in this case, this is really, really high, right? So it's all the way up here. So we would need to see price break above and retest this. I don't really like those kind of positions there. So what I'd be looking to get an entry here is I'd be saying, okay, I'll drop to a lower time frame. I've got a bullish FVG there. So if I go down to, say, a 4 hour from here, right, or actually it'd probably be something in between, but maybe even an hourly, then we can look for the same situation. We've got a sweep. Yeah, if we take out this low here, this is the high that swept the low. So right now on a higher time frame level, I've got this pre-made liquidity level up here, which is 6.180. So now what I want to see is this. I want to see price have a strong move above here, close, you know, a good bodied candle, and then I'll set my limit order in here, tag ourselves into here, and then we play it up to this level there. If I don't get that, right, then quite simply, I wouldn't take the entry. Yeah, and sometimes price can run away with you, and it's quite a binary entry method, but it's quite a good one. And again, it's quite a simple one. You can see anywhere down around here, right? Look, we sweep liquidity here. We're in a higher time frame bullish fair value gap, meaning we're expecting a bullish reaction. So as we see that, we can see a sweep. We then get a high up here. So we're saying to ourselves, okay, again, that high is quite high. So we just wait for a price to repeat the process, yeah? So again, sweep, but we don't take out the high. Sweep, we don't take out the high. Then all of a sudden, we're nice and patient. We get this sweep down here. And price comes here. Price, oh, so yeah, sorry, low. Price comes down to sweep this. This is the high. That becomes our breaker line. And then all we're doing is we're just setting slightly more, yeah, you'd have to really have your stop below that low, which is quite a large stop, but we can't help that because of the wick, and we don't want to risk getting wicked out. However, we still get 1.41 to our first target, which is here. And then we're just monitoring to see what price does, right? Because ultimately we're still aiming for this, but we want to just make sure that these levels are being respected. And by getting in at these kind of early stages, we know where our risk is, meaning that if we're wrong and then price on a high time frame closes below this, it allows us to chase to targets lower down. What you want is a really good triple screen system, right? So for me, for example, I favor trading the 4 hour, the 15 minute, and then the 1 to 5 minute for execution. And the simplest way to look at that, and as we've done there, going from a weekly to a 12 hour to like an hourly, is just working with it to find out, okay, if you're framing a trade, right, then what we're saying is, again, where's price delivering from? So as we're looking here, we can see that price is ultimately holding this 4 hour FVG. Yeah. So as price action starts in the morning, we've had a sweep of this high. We expect a corrective move lower. We're still holding this. So as we look to move into this, then what I'm saying is when we retest that, which was 8 o'clock this morning, then looking for the 15-minute chart, and I'm saying, okay, what do I want to see here on the 15-minute chart to give me an indication to go long? Well, same thing again. We want to be careful of these gaps above, but ultimately we're delivering from this FVG here. Yeah. And this is where we're looking for our bullish reaction. But for me, I like a little bit of extra confirmation. And what worries me here are these gaps above. So I'd want to see price close above this, ultimately inversing it. Remember, we don't invert this, until we close above it on the 15-minute. So we get above this on the 15-minute, and then I would look for a pullback to here. I would then go to a lower time frame. Yeah. And just to give you an example of the type of setup, it would be something like this. We're reacting from our key level here. Again, remember, we want to see price sweep. And then we want to see the high that sweeps the low. Yeah, and this is where we look to take our entry here. Yeah, now I'm not saying jump on and just get into this entry. I think it's still a little bit treacherous because we're still drawing up. This is drawing price higher into this gap, but where ultimately it's going to start to pair orders, and then the market will give us an indication whether it wants to move higher or lower. But we're going to use the 15-minute for that. So we're still a little bit away from our execution time frame at the moment. Hans, sorry, mate, I missed your message there. Hey, BC, Algo on the weekly is busy forming a beautiful cup and handle. Okay, well, let's take a very quick look at that then as well. And Craig, BTC on the 15 minutes looking interesting. It seems to be trying to inverse bearish FVG on the 5-minute chart. It's looking like it's almost confirmed. How long would you wait? Okay, well, let's close up on that then, shall we, guys? We've got a couple of minutes. So let's just look at the Bitcoin chart at the moment on the 15-minute. Yeah, so okay, so for me, I am somebody that likes to trade around the US equity markets, right? So 1:30, so about 35 minutes from here. Now, what we can see here, and this is a really good shout from you, actually, Craigie boy, because yeah, we're before session, so this becomes lower probability, right? But we've just inversed this, right? So that's when we closed above it. Yeah, so I'm just going to put an arrow on that just to show you how the concept of price action works like this, right, on a very, very low time frame. Now, I'm not suggesting you go out and trade these really low second charts and bits and pieces, but this will show you how price is reacting. So 5-minute chart here, as we've been talking about our kind of higher time frame, then we close above it here, right? Meaning that if the 5 minutes, like our 15 is, yeah, and we're using a 1 minute to execute, well, on the 15-minute, then on the 5 minutes, so we need to use something like a 15-second. Right? So what we see here is, and this is the arrow, yeah? So that's when price closed above. Now, we've got this target from our high time frame. So we never want to just be jumping in when we're going long. We want to see price correct lower. We want to see price pull back, right? And then we're looking for confluence. We're saying, okay, price is reacting from our bullish fair value gap here, which we'll do in green, yeah? Then we'd be looking for some kind of structure shift with this particular kind of system, which we get here, which would become our breaker line. And then our target ultimately is this and only this, yeah? Now, it doesn't mean that we would take the trade, because to take this trade, first of all, there is no percentage in it, so your fees would be astronomical. But just to give you an example, obviously we'd look for this on a higher time frame. Then we get the close above. We can put our stop here because it's below this order block, below the body of the order block, and then we chase to this higher. Move our stops up quite quickly because it gives us the opportunity. And then ultimately we get stopped out after taking our profit. But that's because we've hit that level. Now we want to see a higher time frame, back to our 5-minute again, displace above this. So we close this 5-minute candle, then we've got this higher and this higher to look there for the left. So sorry, Craig, I missed your question. BC on the 15-minute, 5-minute chart is looking almost confirmed. How long would you wait? So again, for me, it's all time frame dependent, right? So if we're looking at this, so if you're a high time frame trader like Hans is saying here, then if you've got a daily gap, then you would wait for a daily close above it. If we're looking here at the moment with Bitcoin, I think this is a really good gap, right? I think it's a really good gap for a few reasons. And let me just run over those very quickly. So this here, oh no, actually, I immediately take that back. It's just, unfortunately, because we're before the session. Now, the reason that I trade aligned with the stock market, so we can see here that we've got our London session. If we look back, you've got New York AM, New York PM, is that you notice that the majority of volume steps in within these sessions, right? Sometimes you do get it between, right? Obviously, especially traditional markets, but look at this huge volume here, huge volume spike here in PM, highest amount of volume here in New York AM, because that's obviously, you know, the largest stock market in the world. So that's going to have a really, really big effect. Now, the reason that I had that highlighted earlier was because that was what I wanted to see the close above, right? Now, don't get me wrong, price action at the moment is a little bit skittish, but if we stick to our principle that this was our inversion, right, then what we'd be doing is we'd be looking for long setups in here, yeah? So we've got that on the 15-minute. If we say move to a 2-minute, then we've got the inversion here. Look, it just doesn't give us an opportunity to get on board, right? It does, funnily enough, back here, because we actually get our break, get displacement higher, and we can see price moving up. But what I would be looking for here is cycling through the time frames and saying, okay, well, my concern here for BTC is that this is drawing price higher on the hourly. Yeah. So getting in too early here, you either need to move your stops or cover your position when you get into here until you get that close above. You get that close above, right? And that inversion, then you're looking for these little pullbacks, and then you're ultimately looking to rocket this higher. Until you get that, however, yeah, then ultimately this is still on a bearish bias on this time frame, because look, We've taken out market structure lower. We've got pre-made liquidity from a higher time frame level there. So those things will kind of pan out. The other thing, just to close up on this quickly, that we want to look at, or actually we're going to look at algo, is that just looking at traditional markets, we've got equity markets quite strong today, especially obviously the NASDAQ, which we look at because it's so technology focused, and the dollar index is pulling back. So, you know, that typically paints a picture that's quite good for risk assets, and obviously Bitcoin and cryptocurrency are very, very much risk assets. So let's have a look quickly at algo for our friend Hans. Where are we? Here we are. So what was it you were enlightening us with? Weekly cup and handle, eh? Okay, yeah, I see what you mean. That is interesting. So like our friend Hans is talking about like a cup and handle pattern, and what that actually ties in with quite nicely is how you really often see these kind of, draw that like less of an idiot, these kind of rounded bottoms as price kind of starts to recover and then build momentum, just curves around the bottom, then look as it starts to pop. And actually just kind of looking at those principles that we've just been discussing, see this high here, right? Key high, look at the close above it, look at all the body there. This week then opens up, draws down, allows us to position, and then price is pumping higher. Like I said, price very, very rarely just kind of stops in the middle of nowhere. It needs sellers, needs buyers. You need to have an efficient market, right? So that's the key place that you end up targeting. Intermediate term high, also equal highs. When price breaks structure there, yes, you've got this gap over here, but ultimately when you're then bullish, you want to be respecting, you know, the bullish arrays as much as anything. And the weekly actual here for algo has been really, really clean, delivered off of that absolutely perfectly. Still got a bullish bias here because we haven't had any reason to change. You have to forgive all those low time frame squiggles. So bullish bias, price delivering from here. This was a really good indication. Remember, we talked about a change in state of delivery. So from here, we can see holding the bullish bias. Then when we close above here, we can then use this point, which is the week starting the 19th of Feb. So as we move forward to here, 19th is here, which is perfect. So then all we're doing, looking to get ourselves on board. So what would we be doing? We'd be taking a drawback here, close above here. You could have an entry here. You'd have to have your stops below this low. At the moment, this is a really nice one. So it's kind of a secondary entry. We've swept this low. Yeah. Had that nice reaction higher, set this higher. So you just kind of be using that at your point to kind of get into the trade. That would be our break line. Close above it here, retest it here. Nice low down there. And then you'd be kind of holding for up here. Obviously, again, has to be aligned with your bullish or bearish bias, and we've kind of pulled that off of the higher time frames there. I think once that 0.24 finds support, it should move good. Yeah, I agree. Looks like he's just kind of trying to find a level here at the moment. This kind of fair value gap is currently holding everything pretty well. So again, same kind of principle, right? I think, you know, if I was in on that one, I'd be saying to myself, all right, you might look to close the position out at entry here if you've not taken some profit here, because you want to see this hold and then price ultimately push up to there. This is a really good update from our news team over at the Nest MicroStrategy. Between February 15th and February 25th, acquired 3,000 Bitcoin for about 155.4 million in cash at a price of around about 51.83. I mean, you know, Saylor is a total legend, isn't he? And absolutely loves going after the market. But, you know, it is a good sign. It really, really is. Hey, you're very welcome, Hans. Okay, guys, let's just very quickly just want to finish by looking at this with you. Let's just take a very quick look at the DXY. So this was our analysis from last week. Look again, delivering from this bearish FVG, pushing down to ultimately take out liquidity down here. We are kind of delivering from this really, really bullish fair value gap over here. But again, like I said, when we're looking at this side, when we're bearish, right, and the order flow is bearish, then you're really favoring where price is delivering from, you know, in terms of its recency. So right here, what all the bulls will want to be seeing is this bullish fair value gap closed below, which we've got an hour for it to do so. If we do close below it and we inverse it, then ultimately we're targeting this, which is a nice intermediate term low in between here. Whilst the DXY is bearish, then there's always a much better opportunity for risk assets as it shows the market is putting into it. Yeah, incredible for Sailor. Yeah, always says that you get BTC where you deserve it. And the guy's, you know, yeah, he's been unbelievable for that and a real driving force between, you know, a lot of the good things that we've seen in the market with cryptocurrency. Right, guys, I'm going to love you and leave you there. Don't want to bore you to death all day. What I would say is, you know, listen to our friend Hans here as well and do take a look at the economic calendar. We can see that we've got a lot of red folder news this week, so please do be careful when you're in the markets. Do keep an eye on equity markets as well. We can see, you know, actually things have started to cool off just a little bit here. S&P's kind of slightly up for the day at the moment. And the Nasdaq's just starting to pull back as well. So again, pullbacks are good because they give us opportunities to buy. Just make sure you're looking and aligning the right places that you want to be buyers. All right, guys, you're very, very welcome. Really, really feeling the love. Do have a fantastic week ahead, guys. Over at the Nest, we will be back in Trade Club tomorrow. So we're taking our 7.2R that we're up over the last couple of weeks. We're going to see if we can find some positions. Again, it's going to be a treacherous week, guys, because it's very, very news driven. So we'll want to be getting in and out of those quite quickly. So do let us know in the morning if you've got any kind of hot charts or anything you want to look at, and we'll make space for that on our system as always. Guys, lots of love to you all. Have a fantastic week ahead. I will be live again on Wednesday for anybody that's interested, and we're going to kick that off around about midday. Have a great week.